welcome back to the channel. As we get closer and closer to the end of this bear market, we got to start doing more TA. So today I'm going to try something new. We're going to keep this video short. I'm going to give you just the key pieces of information you need to know about Bitcoin, Ethereum, EGLD, and Cardano. The last video went into a lot more detail, so you can check that out if you want some of the macro information, but we're trying to keep this short so that we can do more of these. So let me know in the comments if you prefer this shorter form. Make sure you like, make sure you subscribe. Follow me on Twitter/X. The link is in the description. That's where I'm most active. Let's go ahead and get started. Okay, so we're looking at the Bitcoin chart, and there's really a key piece of this that I showed you last week that's super important. Last week, we were down over here. We were looking to come and test this, which we did. So we tested that 24.5 to 25.3K support, and then we bounced out of it. Now, remember what I told you last week. I said that you have to get over this 20 exponential moving average on the daily. So now what we've done is we've broken that. We've also got support on it so far for 2 daily candles. We went all the way up to this moving average here, hit resistance, which is exactly within all of our moving averages, and it's within the golden pocket, which is this lighter blue shade that we have. Now, what's key about this is that if we get support on the 20 exponential moving average, that's showing us that momentum to the top side is building. And you can kind of see that on the bottom of this chart here. This market cipher indicator basically tells us where the momentum's moving. Now you can see that the momentum moved upwards after we received this buy signal. So what's really key about that is that we want to start seeing trading in this range above the golden pocket. So right above the 20 exponential. We also want to see the 20 exponential moving average start coming up and become one with the golden pocket. That's really key. That's what I'm looking for. Now, if we lose this 20 exponential moving average, nothing changes. We're still looking at 24.5 to 25.3K for support. So what does this really tell us? It tells us that for buy zones, we're really targeting now this area here, which is the support zone that we have created with this level of trading. So that means our support actually moves up now all the way to about 26K. So this means if I'm looking to buy, the value buy areas that I'm looking at right now are between 26K and 26.5. So we're very close to that. If I want to get a better purchase, I have to assume that the price may drop and then put my buy orders into 24.5K to 25.3K. In fact, right now, this area is where my buy orders are. I'm still looking for a bigger move into the middle of this golden pocket, somewhere around the 27.6 range to hold. The thing I don't like here is that we went up to 27.6 and then we fell back down to this level, which makes sense. I mean, this is right at the golden pocket, so we know that it's a support area. So if we hold 26.6 and stay in the golden pocket, I'm all for that. And what you should be looking for is for trading between 26.6 and 28.7 in the short term if we hold the golden pocket. Value buys, 24.5K to 25.3K. That's really it. That's the key thing to look at. The only thing that I think is somewhat important as well is that the RSI has now broken into the 45 level. If we get support in that 45 level, that's a key indicator that we are moving bullish. Right now, it looks like we are doing a reversal into a bullish trend, but it's too early to tell. The next 3 to 4 days are critical. Make sure you set your orders as you see fit, and we'll come back and look at this in about 3 days. Let's move on to Ethereum. Now, for quite a while, Ethereum has been following Bitcoin, but we are seeing a very slight deviation now. We have not broken above the 20 exponential moving average. So I'm going to zoom in here and show that to you. We're actually at that moving average now. You can see with the Bitcoin chart, we're above that moving average. So this actually shows less strength than Bitcoin, which makes sense because what this is telling us is that the Ethereum and DeFi markets are basically looking to what Bitcoin is going to do. People are playing it a little more safe with Ethereum, and they're not buying as much because they're unsure about what Bitcoin is going to do in the short term. You can see when Bitcoin pumped above that 20 exponential, this actually did too. We went all the way up to around $1,670, but then when Bitcoin dropped, we fell back to the 20 exponential. So basically right now, the buy zone for Ethereum is the same as it was before. It's basically between 1530 upwards to around where we are right now, 1635. So that $100 range is the value buy zone. If you think Bitcoin's going to crash, then you're looking to set orders down here at around 1420, that would be the place that we would expect to see us drop if we lose 1530. Now, there's no indication that it's going to go down there. I don't have any Ethereum orders that low. My value orders are sitting right around 1525 to 1530 right now. The key with Ethereum for appreciation is seeing us get above that 20 exponential. We need to break about 1640 and get support there. Now, if you see Ethereum make a move to the upside and it goes all the way up to 1750, and it gets resistance here, well, that's very similar to the move that Bitcoin made and got resistance on its upper moving averages on the daily. So keep an eye out for that. That happens to Ethereum. Ethereum is going to be looking way more bullish in the short term, and you're going to be looking to buy anywhere between 1630 and 1770. So if we are on an uptrend with Bitcoin, expect Ethereum to start trading at these levels. You may not get more opportunities below if Bitcoin does not drop, or if there's not any like bad news towards DeFi. So that's pretty much it for Ethereum. We're also seeing that the RSI is hitting that 45 level. No support as of yet. It's just kind of treading at that level. So it's still very unsure. I'd be a little bit more careful with my Ethereum orders here. All right, let's move on to EGLD. Okay, relative to this move, EGLD is actually looking more bullish than Ethereum here. It's actually even looking more bullish than Cardano, and we'll get to that one next. But basically what you're seeing in the longer term, right, you still see this descending channel, which is the brutality of DeFi that we're kind of dealing with right now as the industry faces a sick liquidity crunch. But with this recent move, we went below our red bottom level, which is the one we've been tracking for months. So I hope you were able to buy below that. You had a good 4 days to do it. Now we are back above the 20 exponential moving average. Great sign that we got support on it 3 days in a row. Now what I want to see is a move to the upside here. But once again, we are dependent on what's happening with Bitcoin. So keep that in mind. Either way, I still have orders all the way down to around $22 just in case, right? I bought plenty down there when we dropped, but I still have my value DCA buy orders at that level because until I see a bigger move from Bitcoin that's sustained, I don't really know if we're going to break above this or not. And we know resistance is waiting at the bottom of this descending channel, which means right now that's at around $28. So regardless, even if we move up, I would expect EGLD to hit resistance here, possibly come back down to this red line in the center where we're building support, and then move up until it breaks back into like the $30 range in the descending channel. Now, another interesting thing is that X Day is coming up at the end of next month. Now, this is going to be an event that is going to put Multiverse X back in the forefront to a lot of different people and start doing, you'll see more media about the project and things like that, and it could bring in some liquidity. Now, as that happens, and depending on what's announced, we could see some big moves that day. There's no way to predict that. It's completely dependent on what happens during the conference. So make sure you kind of stay ready for that and you're ready for things to get volatile around that time. Impossible for us to predict what the impact will be, but it's fair to say that there will be some. All right, so that's everything for EGLD. Let's move on to Cardano. Okay, so Cardano is actually looking a little more bearish in comparison to EGLD and Ethereum. Now, the reason for that is that even though we were in this downward trend here, we're actually putting in a new descending channel right above it. Now, in order to really show bullish momentum, the first thing that needs to happen is the same thing that I mentioned on both the other sections. And we both know what that is. It is seeing us break the 20 exponential moving average. Now, what's key with Cardano is when we zoom out and we look at the volume profile on the right, you can see a massive amount of resistance above us between the 30-cent level to the 40-cent level. That's a huge amount of resistance. And right now, we are sitting at resistance between 25 cents and 27 cents. This means that there's really no reason to assume that we're going to go all the way up to 40 cents until we at least show some indication that we are going to break above 25.4 cents. That's really key, and we've been hugging it so close with rejection after rejection that it's looking to me like it's becoming a very tough feat to break that level. So that's the key level I'm watching. Now, if we were to lose that, there's a very good chance we do exactly what we did here, which is take a drop to around the 16-cent level at the top of this descending channel. Now, if you're a Cardano investor or looking to get into the asset, this tells you that there might be some opportunities to do value buys lower than we are now. There's no guarantee they're going to hit, but if you're looking to accumulate, you might as well have some orders there just in case, right? It could be something similar to this where you see a quick crash and then a quick recovery. Things like that happen in the depths of the bear market, and the people who get to take advantage of them are the ones who had the foresight to set the orders. No matter what you do, just manage your risk and you'll be good. That's really the key. You never invest more than you can afford to lose, and then you're putting yourself in a good position. All right, looks like we've done it. We managed to get all 3 assets in around 10 minutes, maybe a little under it. Let me know if you enjoyed this shorter form, if you found this more beneficial, and we'll continue doing it. We'll still do longer videos, but these short ones may be just what the doctor ordered for some more TA. Make sure you follow me on Twitter, like and subscribe to my channel here on YouTube. I'll catch you later. Peace.